Dear friends, welcome to lecture 1 video. I hope you are all doing well. In this lecture video, I will solve a couple of problems from module 1. So let us get started. I'll share my screen first. So this is the problem we would like to solve first. Applying financial statement relations to compute dividends. Fill in the amounts for the Norfolk Southern statement of changes and retained earnings. Use negative signs with your answers when appropriate. Norfolk consolidated statement of changes and retained earnings. So we have beginning balance, December 31st, 2015. We have net income, it is empty, so that basically means we have to solve for this amount. We have dividends and common stock with parentheses, so that means it is a negative number. It's a negative number because when a company pays dividends, it reduces retained income. Similarly, share repurchase, a negative number because when a company repurchases shares from its owners, it has to pay to its owners, which would reduce retained income. We have another category called other that also reduces retained income by 13. Finally, we have ending balance of 16,680. So we know if we have beginning balance, we add net income and in short, subtract dividends, subtract share repurchase, and other will end up with ending balance. So we have 16,306 as beginning balance. Net income, we do not know. Dividends, 1,112. Share repurchase, 1,170. Other is 13. Ending balance, 16,680. We have to solve for net income, so we'll keep net income on the left-hand side. And then we'll take these numbers to the right-hand side, which will change their signs. And we'll keep this number on the right-hand side, okay? So 16,680 minus 16,006 plus 1,170, 13. $2,669. Let me see if we arrived at the correct answer. 2,669. Okay. So I'll copy this, paste here. And this is our answer. Now, let us move on to the next. In our next question, we have to solve dividends. So we'll use the same equation as before. But now we have a beginning balance of this much, 16,680. So this is the ending balance of December 31st, 2016, which is the beginning balance for 2017. So 16,680 And then it is giving us net income 8,646. Dividends we do not know, we have to solve for it. Share repurchase 1,512. Other is 8. That lead us to ending balance 22,682. So now we have to solve for dividends, but it has a negative sign. So what we are going to do, we are going to take this to the right-hand side. And we'll keep the other numbers on the left-hand side, but then we will bring this right-hand side number to the left-hand side. So 16,680, 8,006 minus 1,000. We have 1,124. Let me see if we arrive at the correct answer. 1,124. So yes. I'll copy this number, paste here. Moving on to the next, we have to solve for share repurchase. Again, we are going to use the same equation, but one more thing I would like to emphasize here. So our dividends is 1,124. And it is a negative. So for the next question, we have to find out share repurchase. So we have 22,682. Plus our net income, 4,266. Our dividends, 1,350. Share repurchase, we don't know. Other is a positive number here, so I'll write down 130. Is equal to 21,004. So we have to find out share repurchase. As before, what we are going to do, we will take this share repurchase on the right-hand side so that its sign becomes positive. 22,682 plus 4,266 minus 1,350 plus 130 minus 21,504. This is from the right-hand side. So its sign changes, equal to share. So 4,224. Now share repurchase is 4,224. Also a negative number. $224. Now, in part B, is it true or false that Norfolk Southern purchased its own share back during each year from 2016 to 2018? So remember, as a company repurchases its shares back from its owners, it pays to its owners. So retained income decreases. So if retained income decreases, that means for share repurchase, that means the company did purchase its shares from the owners. So we have to see whether share repurchase is negative in every case. It is negative here. It is negative here. It is negative here. So true. This will be true. Doesn't look like I can write inside it. All right, so let us move on to the next question. So the next question I would like to solve is this one. So what we have here is formulating financial statements from raw data and calculating ratios. Following is selected financial information from General Mills Incorporated for its fiscal year ended May 27, 2018. In millions, okay? Cost of goods sold, cash for investing, cash end of year, income tax, revenue, total expense other than cost of goods sold and income tax. So we have cost of goods sold and income tax separately given here. So it does not include those expenses. Cash from operating activities, non-cash assets end of the year. So we have cash end of the year, non-cash assets end of the year. So if we add these two, that will become our total assets. Cash from financing activities, total assets beginning of the year. We have to find out total assets end of the year for the balance sheet. Total liabilities end of the year, stockholders' equity end of the year. Okay, prepare income statement for the year ended May 21st, 2018. Okay, so here, income statement, this number, 17,314, it is revenue. So I'll write down revenue here. Bold to indicate these are the cells we worked on. Now, after revenue in income statement, we have cost of goods sold. I'll take cost of goods sold, paste here, which is this number. Paste here. Now, after cost of goods sold, we have gross profit. Now, gross profit is equal to your revenue minus cost of goods sold. So revenue is 17,000. $5,970.2. After gross profit, we have expenses. So total expenses other than cost of goods sold and income tax. So what we are going to do, this amount is 3,527.9. If we subtract these total expenses, we'll get income before taxes. So let us do that. So minus 3,527.9. So 2,442.3. Check if we are getting the right answers. So 5,970.2. Income before tax 2,442. Now, after income before taxes, we have to subtract income tax, which is $63. So I'm going to subtract 63. I will have 2,379.3. This will be net income zero. Now we have to prepare the balance sheet. So balance sheet, we need total assets on the left-hand side. So we have cash end of the year, 438.9. We also have non-cash. Cash assets, non-cash assets. It's much. So total assets. $33,686.4. Now we need to find out liabilities and stockholders' equity. So total liabilities, $6,544.8. Then stockholders' equity, if we add these two, we'll get $33,686.4. That should make sense because the total assets should be always equal to total liabilities and the stockholders' equity. To get done with balance sheet. Now, cash flows. So for cash flows, we have an empty row here. We have investing, we have financing. So we know we are missing operating activities. So let's see. Cash from operating activities. Our cash from operating activities is cash from investing activities. This one is a negative number, okay? And it also says use a negative sign, okay? So use a negative sign. To indicate cash was used by activities and or a decrease in cash, okay? Cash from financing activities. So if we add all these three, we'll get net increase or decrease in cash. See what happens actually, increase or decrease. So we have 3,125.1 negative 9,553. So it's a negative. So cash decreased during the year. Now we have to add to this the beginning cash. Let's see if we have it here. We have cash end of the year. We don't know. So what we can do, we can use cash end of the year. Let me rewrite it as 10. The cash end of the year is 438.9. Now, although we had a decrease of cash during the year, we ended up with positive cash at the end of the year. So that basically means this number has to be much larger, right? So it will be 438 0.9, and we have to add the plus 402.9, which is 841.8. So we solve for all these. Let's see here. 138.9. So again, just to explain it a little further, so from a statement of cash flows, beginning of, or I can say beginning cash beginning of the year, and then plus net increase, or whatever happened, decrease in cash is equal to cash. So cash beginning of the year, we don't know. Cash end of the year, and then we'll bring this to the right hand side, which will be negative net increase, decrease in cash. That basically means cash end of the year 438.9. Now negative net increase, which is a negative 402.9. Now remember, so this negative and negative will become positive. So 438.9, 402.9, which is 841. So this is how to understand this, if it is not clear directly to you guys. All right, so now let us move on to the next question. We have to find out return on assets. So ROA means return on assets, which is your net income divided by average total assets. So your net income is, you already found out at the income statement, 2,379. Now, your average total assets. To find out the average total assets, what we have to do, we have to take beginning cash plus ending cash divided by 2. So basically, we have to calculate the average cash using beginning and ending cash. So which is our beginning cash was, we found out through our statement of cash flows. Beginning total assets. I misspoke. So your beginning total assets 23,993 plus ending total assets. It's now divided by 2. So let's see how much we get. So 23,993.9 plus now we can calculate return on assets. Take this number, divide into net income. 2,379. So it is asking us 1 decimal place. So it should be 8.2. So 8.2%. So let's see. 8.2%. Okay. Now, the next one is profit margin. So profit margin is straightforward. The profit margin is equal to your net income divided by sales. Your net income is this. Your sales from income statement now, which is so 1 decimal place 13.7. See, 13.7. Next, 80. 80 is asset turnover. You know, asset turnover is equal to your average sales divided by average total assets. So your sales, 17,340, 14.4 divided by average total assets. We already calculated here, 28,000. So round asset turnover two decimal places. So it should be 0.60, 0.60. That is the end of this problem. So that is it for this lecture video. I will see you guys in the next lecture video. Take care.